I'm feeling barbellish here, just reading the kind of thing you're looking at. So it's not like you don't like growth. You like growth and technology, communications, but then you also like value, industrials and financials. So I don't know. That just sounds like you're trying to cover the entire environment. Maybe that is the right move.
Yeah, it's called hedging your bets, Joe, and good morning. And playing another word, irregardless of the environment, right? You want to make sure.
Disregardless. Disregardless.
That's right.
Throw in like 4 negatives, and I think you're back to regardless.
Then we're back to regardless, exactly. So, yeah, what we're trying to do when positioning portfolios for our investors is to take advantage of what Dom just talked about, the stay-at-home, work-from-home, shop-from-home environment. A lot of those names are still growth-oriented. Fed Chair Powell is committed to next to nothing on interest rates for 3 years. So you are going to be discounting profitability in that space at next to nothing. So that's why we still want to make sure we have some growth opportunity. But yes, we're looking at some of the value plays as well in that barbell structure, whether you think about stimulus or infrastructure. And I think we need to make a delineation between the two, because stimulus, the nearer term, what the market's rallying on, appears to be still plugging the holes. But regardless of who wins, we'll go with regardless this time, regardless of who wins, we'll see some degree of infrastructure, and we think that bodes well for industrials and materials.
Yeah, exacerbate is another one. I'm not sure what the heck. I'm not sure what the heck that. I do hear people use that though. Some famous people I've heard. Anyway, so John, the stimulus, we've gained back more on a piecemeal than we lost on where the president ended talks. Do you think that the Regeneron news or Trump's quick recovery, do you think that played into it? Art Cashin said maybe part of it was the prospect for antibody drugs as maybe another maybe piecemeal, if you will, solution to the pandemic.
Yeah, I think the market, as you know, an emotional endeavor, right? So I think nearer term, yes, optimism about Regeneron and remdesivir and some of all these drugs that are helping the president to the degree that can help sentiment overall. I think that's positive. But longer term, Meg was talking about 300,000, it appears, max. And there are, 330 million of us in the U.S. So, there will be issues. And the whole idea of determining who gets the vaccine, that also could lead to some pressures on optimism going forward.
So you seem to be a little bit concerned about some of the Biden proposals in terms of capital gains, et cetera. If he stays double digits ahead between now and the election, do you expect to see that, or do you think that the fiscal boost some people say you'd get from a Biden presidency, does that counteract the higher taxes?
Yeah, we took 5% down in equities 3 or 4 weeks ago. And, I want to emphasize that, the market always finds a way to determine what the next catalyst is. But yes, if Biden is elected, I think there will be a short period of comeuppance as people try to figure out what dividends and cap gains and ordinary income, for example, what the corporate tax rate going from 21 to 28. So that could be a shorter term pressure on the market. But then as investors see potentially a Democratic Senate in addition to a Biden victory, if you see that, then all of a sudden it's a broader infrastructure package, right? And then that would benefit the barbell approach, because you could see broadband, you could see highway, you could see transit, you could see water, and that could be a broader opportunity which would benefit that barbell style.
Shepard Smith here. Thanks for watching CNBC on YouTube.